Malaysia stands out as one of Southeast Asia's most dynamic economies, having transformed itself in just a few decades from a commodity-based economy into a diversified middle-income nation. Its trajectory is particularly interesting because, unlike some of its neighbors, Malaysia has never relied on sheer scale or cheap labor alone. Instead, it adopted a strategic, outward-looking approach, studying and emulating the success of the so-called Asian tiger economies, Hong Kong, Singapore, South Korea, and Taiwan. The cornerstone of this strategy was export-oriented industrialization. Beginning in the 1970s, Malaysia moved beyond its historical reliance on tin, rubber, and palm oil to develop manufacturing hubs in textiles, electronics, automotive, and later semiconductors. Crucially, the government actively welcomed foreign direct investment, FDI, particularly from Japan during its economic heyday. Partnerships with companies like Mitsubishi, Honda, Sony, and Panasonic provided not only capital but also the technological know-how Malaysia needed to industrialize. At the same time, Malaysia reinvested these gains in infrastructure, building high-quality roads, ports, and digital networks. This allowed the economy to move into more complex manufacturing while also improving quality of life for its citizens. Its geography has been another major advantage. Sitting at the Strait of Malacca, one of the busiest shipping lanes in the world, Malaysia enjoys a logistical edge that supports both trade and investment. Finally, Malaysia's low cost of living, coupled with modern amenities and relatively high-quality healthcare and education, has made it attractive to expatriates, remote workers, and investors. This combination, strategic location, solid infrastructure, openness to FDI, and strong export orientation, forms the foundation of Malaysia's impressive economic rise. While Malaysia has achieved remarkable progress, its economic model is not without challenges. A key concern is its heavy reliance on foreign direct investment and external technological know-how. This dependency fueled industrial growth for decades, but it also leaves the country vulnerable. When global partners slow down innovation or shift supply chains, Malaysia risks being left with outdated industries and weaker growth momentum. Another structural issue is the so-called middle-income trap. Malaysia has already moved past low-income status, but to reach advanced economy levels, it must generate its own innovation, invest in research and development, R&D, and steadily increase wages. Without these steps, neighboring countries with cheaper labor, such as Vietnam or Indonesia, could lure away valuable investment. Domestic disparities also pose challenges. Economic opportunities remain concentrated in peninsular Malaysia, while East Malaysia, which is more rural and ethnically diverse, risks being left behind. Government policies, originally designed to reduce poverty and encourage ethnic inclusivity, have in some cases created perceptions of reverse discrimination. Prolonging such measures without reform risks entrenching inequality rather than resolving it. Finally, governance and corruption remain serious obstacles. The infamous 1MDB scandal not only damaged Malaysia's global reputation, but also eroded public trust in institutions, an essential ingredient for transitioning into a high-income, innovation-driven economy. Building a high-trust society is critical if Malaysia wants to attract advanced industries and strengthen domestic entrepreneurship. In short, Malaysia's growth story is impressive, but without tackling these structural weaknesses, over-reliance on FDI, risk of the middle-income trap, regional and social inequality, and institutional corruption, the country may struggle to sustain its trajectory towards becoming a fully developed economy. Recognizing the limitations of its past model, Malaysia has charted a new path through its new Industrial Master Plan 2030, NIMP 2030. The strategy centers on three main pillars: moving into high-value industries, fostering innovation through research and development, and embedding sustainability into economic growth. A central focus is the semiconductor industry, where Malaysia already plays a significant role. The country accounts for roughly 13% of the global market in chip testing and packaging, making it an indispensable node in global supply chains. By attracting investments from leading companies like Intel and Infineon, Malaysia aims not only to maintain its position, but also to climb further up the value chain. This involves nurturing a domestic ecosystem of engineers, suppliers, and technology firms that can support more advanced chip design and production. Human capital development is another priority. Malaysia is funding programs to train tens of thousands of engineers, particularly in STEM fields, to align its workforce with the demands of high-tech industries. The long-term goal is to transition from being a low-cost manufacturing hub to becoming an innovation-driven economy capable of producing its own intellectual property and technologies. On governance, the government has introduced initiatives such as the National Anti-Corruption Plan 2019-23 to restore public trust and create a higher level of institutional integrity. While results have been mixed, the recognition of governance reform as a national priority marks an important step forward. In short, NIMP 2030 represents Malaysia's effort to avoid the middle income trap by shifting from cost competitiveness to innovation competitiveness. If successful, this strategy could position Malaysia not just as a regional manufacturing hub, but as a global player in advanced industries.
In Southeast Asia, Malaysia occupies a unique middle ground. It is not as advanced and service-oriented as Singapore, but it is far more industrialized and globally connected than emerging economies such as Vietnam, Indonesia, or the Philippines. This positioning gives Malaysia both advantages and vulnerabilities in the regional competition for investment and talent. Compared to Singapore, Malaysia benefits from lower costs. Housing, labor, and general living expenses are significantly cheaper. This makes Malaysia attractive for manufacturing, logistics, and even digital nomads seeking affordability with modern amenities. However, Singapore retains a sharp edge in terms of governance quality, financial services, and innovation ecosystems, which Malaysia still struggles to match. Against Vietnam and Indonesia, Malaysia enjoys superior infrastructure and a more established industrial base, especially in electronics and automotive. Yet these countries are rapidly catching up by offering lower labor costs and ambitious reforms to attract foreign capital. Vietnam, in particular, has become a strong competitor in electronics manufacturing, while Indonesia leverages its resource wealth to draw investment into green industries such as electric vehicle batteries. Regionally, Malaysia's strength lies in its strategic location at the Strait of Malacca, enabling it to serve as a logistics and trade hub for both East-West and intra-Asian supply chains. Its relatively high living standards, coupled with English proficiency and multicultural society, also enhance its appeal to foreign professionals and investors. In short, Malaysia is squeezed between high-income Singapore and fast-growing lower-cost neighbors. To sustain its edge, it must continue upgrading industries, improving governance, and fostering innovation. Otherwise, it risks being overshadowed by more agile regional competitors.
Malaysia's economic journey illustrates both the strengths and limitations of the Southeast Asian development model. On the one hand, the country has successfully transitioned from a commodity-based exporter into a diversified, semi-industrialized economy with solid infrastructure, rising living standards, and an established presence in global supply chains, particularly in semiconductors. This represents an achievement few developing countries have managed in such a short span of time. On the other hand, Malaysia now stands at a crossroads. The old growth drivers, low-cost labor, foreign capital, and export-oriented manufacturing are no longer sufficient to propel it into high-income status. Compounding this challenge are structural constraints, the middle income trap, uneven regional development, and lingering issues of governance and corruption. These factors could slow momentum if not addressed decisively. The long-term outlook depends heavily on Malaysia's ability to execute reforms and upgrade its economic fundamentals. If the new Industrial Master Plan 2030 delivers on its promises, advancing innovation, strengthening domestic industries, and improving governance, Malaysia has the potential to secure a stronger position not just regionally but globally. Its strategic location, multicultural society, and relatively high human capital provide a strong foundation for such progress. Ultimately, Malaysia's story is one of promise but also of caution. It has proven its capacity to adapt and grow, but the next stage of development requires deeper institutional reforms and a cultural shift toward innovation and transparency. If these can be achieved, Malaysia could emerge as one of Asia's most resilient and competitive economies in the decades to come.